Hello, this is Dr. Eric Bricker, and thank you for watching How Insurance Works. Today we're going to talk about how coinsurance and out-of-pocket max works. I could barely fit it on the board. Okay, so coinsurance is the amount you still owe after the deductible. And that amount of coinsurance is typically 20%. So now we're going to have to do some math. I'm sorry. So let's say you have a $2,000 bill from a hospital. Okay, you have a $1,000 deductible, which means you have to pay the first $1,000. But then you have to pay 20% of the next $1,000 that's left. So 20% of $1,000 is $200. So the amount that you owe on that $2,000 hospital bill would be the $1,000 plus $200, or $1,200. Now, the out-of-pocket max is the amount of the deductible and the coinsurance where you stop having to pay. Now, let me give you an example here. Again, it involves math. Let's say your out-of-pocket max for your health insurance plan is $8,000. And again, let's say you have a $1,000 deductible. That means, let's say, you and your family, unfortunately, you had a very sick year. There was lots of trips to the hospital, lots of medications, etc., etc. And all of that coinsurance added up to $7,000. So the $1,000 plus the $7,000 equals $8,000. So you reached your out-of-pocket max. So you don't need to pay anything anymore. If you go to the doctor or the hospital one more time, the insurance company pays for all of it. That's the out-of-pocket max. Now, it's important to remember that all of this, the deductible and the out-of-pocket max coinsurance, they all start over every year, usually on January 1st. So if you go to the doctor or the hospital on January 2nd and there's a bill, the deductible, it all sets back to zero and you start all over again. So I'm not here to talk about whether or not that's fair or right. I'm just explaining to you that's how it is. And thank you for watching How Insurance Works.